In this video, we'll discuss the hammer and shooting star patterns. These are two important reversal candlestick patterns. Let's start with the hammer. A hammer forms after a downtrend. It has a small body and a long lower shadow. This shows strong rejection of lower prices. Sellers pushed price down, but buyers stepped in and pushed it back up. That rejection can signal a potential reversal upward. Now let's talk about the shooting star. A shooting star forms after an uptrend. It has a small body and a long upper shadow. This shows rejection of higher prices. Buyers pushed price up, but sellers forced it back down. This can signal a potential reversal downward. However, context is very important. These patterns work best at key levels, such as strong support or resistance. Without context, they are weak signals. Always check the overall trend and wait for confirmation from the next candle. Beginners often enter too early. Patience improves accuracy. Remember, these patterns show rejection. Rejection can lead to reversals, but not every time. Combine them with structure and trend direction. Keep your analysis simple. Avoid overcomplicating your chart. Quick recap. Hammer appears after a downtrend. Shooting star appears after an uptrend. Both show strong price rejection. Use them with context and confirmation. In the next video, we'll discuss engulfing candles.